Yo, what's going on, guys? Camilo here. I hope you're well. And so, we've been watching the markets for a while now, and in this channel, we've been outlining and interpreting the fact that there are two possible scenarios. Okay, scenario number one is that we continue on higher, we hold this line, the 50-day simple moving average that we've been explicitly talking about here for the past couple of days. And the secondary option is that we've reached the top and the primary degree wave one has completed, and we are now in the makings of our primary degree wave two. Now, while I don't see any signs of that just yet, okay, there's still a possibility, but talking about price action and chart patterns, we haven't seen a clear five-wave decline to start saying, all right, or an aggressive sell-off within the smaller time frames. Okay, there's too much overlap in the zone for us to start saying, okay, perhaps this is what we have to start considering. Not yet, guys. Okay, so what we're going to talk about today are two things. Now, the 50-day simple moving average, as you see here, coming from October 30th low, we've been holding this line as support. The markets has been holding this line and clearly carrying us higher. Now, we are approaching the line. We are approaching price action, which comes in at 441, right? 441.96. And I've been outlining this area here. Okay, I've been outlining this area of clear support for a possible bounce opportunity. Now, why do I say that? It's because this was clear support, clear resistance from July 23rd to the breakout on August 5th. We broke out ever so slightly and then we sold off. We held the 50-day, right? We hover above it and then we broke out. And so once we made a new high, we then sold off. And now we're looking for a support. So the next levels of support that we're looking for are the zone here, the 443, 441, and obviously our fib zones. Now, before we dive into the analysis, right, I want to point out to you guys why we are going to wait for Friday. Friday is options expiry. Okay, and options expiry, we have been seeing a clear pattern for the past couple of months. And let me show you guys real quick. So I have here in the chart in front of you guys the daily time frame of the XPX, the SPX, right? And what are these lines? These lines represent options expiry months and weeks, right? And you can see here that let me just pull up the calendar for you. This is the calendar. So comparing it, right, you see that starting from, let's take a look, from June. Okay, let me just put this here. So from June the 18th, you look down here in the screen, right? June the 18th has a fire, that's expiration. You see that there was a market low and then we ramped up, right? We rallied thereafter. Then comes July 16th, which is our next month with the expiry date over here on the right hand side. You see that it also dipped. Okay, and then we did it again back in August 19th, August 20th, which was expiry date. We dipped and then we rallied. Now we're here on September the 17th, coming into this week on Friday. So September seems to be another slow month. And as I mentioned yesterday, October, November, December, January, February, March, April, up to April. These are the best months for the S&P, and the other months are statistically proven to be the worst months for the markets. Now, September, we're in the middle of September, approaching OPEX. What could this mean for us? If we are to follow this pattern, right, since May or since June perhaps, okay, where we see a clear bounce after OPEX, then perhaps we might see clear downside. And the 50-day simple moving average is what's going to hold us up. Okay, you can see here that this is displaying. So every time the markets dip on OPEX, there is a clear support for the for the 50-day moving average. All right, so that's what we may be expecting, and that's what we're going to look for coming into this week. Once that clears out, we will then determine what is going to happen. Now, please, this is really important for you guys to understand. Be patient and let this week play out. There's no need to rush into any place. Moving down to the 30-minute time frame on the SPY, we see that from August. Let me just turn off my labels here. From August 19th low, right? 5 waves up, 1, 2, 3, 4, and 5. And now we're looking for the A, B, and we're looking for the C wave pullback to complete. Now the C wave pullback it's clearly coming within the zones that we're looking for. As you can see here, guys, this area, the 441, is where the 50-day simple moving average is on the daily time frame. Let me zoom in and let me turn on the 50. All right, so I said this yesterday. As the days go, price action will meet the moving average and we'll head on higher a little bit. So I'm gonna update this and put it up there. 442 even is where our next level of support could come into play. As the moving average, as the days go, the moving average also does. So back down to the 30-minute time frame, where is that level? 442. Here we go, 442. So we're about, just less than 0.5% away from that level of support. And obviously, as you can see here, we're below the 50-day on the 30-minute time frame. So that's a level that is going to keep us under pressure. Now, the wave count is suggesting that wave C on this wave 2 pullback is coming to completion. We are at the 60, we're sandwiched between the 50 and the 61% retracement, okay, of this overall advance. Now, the way we're looking at this for a possible bounce play, guys, is that we want to wait for that for OPEX. We want to wait for Friday to come. I'm not going to rush into no plays this week. We're going to hold the ones we've got, and we're going to wait until next week or what we see on Friday, or even this week. Who knows? But for now, our interpretation is that we are hovering within the zone. We are at key levels in the markets that everybody is watching. So you heard it here. You're hearing it on the news. You're hearing it on other companies or whatever. And so, all right, so just keep those on watch and be ready to expect the best and the worst, or whatever the saying is. All right, guys, so watch out for these levels: 441, 440, 51, 442, and 442 over here. Over to the Qs. The Qs are also displaying similar activity. Now, off August 19th low, when up in 1, ABC pulled back into the wave 2 of the C of wave 2, and we're still here existing on between the 23.6 and the 38.2 fib levels. As you can see here, the 38.2 is holding clear support, and it's in line with what was previously shown here in history in the price action. So the 373.87 is clear and is key for us to hold. Once we see what OPEX or what this Friday is going to be a store and at play, then we will know what's going to happen. Over to the SMH. SMH broke out ever so slightly today, but we're still looking at this as the wave B. Okay, it has not changed. We have not broken above our resistance levels, 276 or the 1272 external fib retracement level. That's the retracement from wave A. And now we are holding this line as resistance, and we should be looking for further price action to the downside. So our next levels of support should be the 268.77 and 264.91. IWM just broke below the 50-day simple. Sorry, I said this yesterday. My bad, guys. Just broke below the 50% fib zone. Okay, and now we are, we got to keep on waiting for this one. Okay, no need to rush it. And so once we start seeing clear bounce, then we should head on higher. Obviously, there is some overlap here in price action, and so it's still indicative of a corrective move. Now, our next level of support could come in at the 618. Alternatively, worst case scenario, before we start really worrying about small caps here, is the gap fill. If we break below the gap fill support zone of 216.06, then invalidation comes in at the start of wave 1. And if we break below these two zones, if we break below this zone and then the low of the initial wave 1 advance, then this whole wave count is invalid and we are still within perhaps a corrective move or, further downside on IWM. All right, guys. So once again, we're going to be waiting for the support area for the 50-day simple moving average. We're going to wait for Friday to see what that day brings up to us, and we'll take it from there. As always, thank you so much for your time. Thank you for subscribing. Thank you for joining Trending Waves. The link to the free Discord group is pinned down in the comment section. Consider subscribing. Give me a thumbs up on that video. It helps it out, and hit that bell notification icon so you'll be notified when I upload the videos. As always, thank you so much. Have a wonderful night.